Hello everyone, welcome back to Edwards Trades. Today's video is gonna be a fairly quick video. I'm just gonna go over very briefly about what has the CPI data revealed to us and what my implications and interpretation means for the stock market. So, as I mentioned in my last video, that the market was basically awaiting for CPI data, and CPI data basically means a consumer price index. So it's basically it's an annual report, not an annual, excuse me, a monthly report on food, foods, excluding energy, and whether or not it's being inflated or deflated, right? So basically, this measures inflation, right? And the reason why this is important is because with the Fed's setting interest rates and rate hikes to stock markets, they tend to try to, in order to drive down inflation, they set these interest rate hikes, and his rate hikes, I think currently is 0.75 interest rate hike, to in order to decrease inflation as well as to control the economy, right? So what the CPI data revealed on Wednesday's trading session, which I'll go over the Nasdaq later, but what this article basically, or what the CPI data revealed, is that the CPI index rose about 1.3% seasonally adjusted, and 9.1% annually. This is an article by the CPI inflation calculator. And basically, what this implies is that inflation is still a little bit out of control. As you can see here, all the items here grew about 9.1% in the span of 12 months. I think includes the energy. Energy increased 7.5% over the month and contributed nearly half of all items, increasing gasoline index rising 11.2%, and then the food indexes rose 1.0%. So in other words, what does this all mean, right? That basically means that food and energy are getting a little bit more expensive, especially the food category here. Let me see if I can show you guys here. The food index has grown about 1%, and the reason why that's important is because as an investor, there are such things as safe stocks, which is like you got your corn, I think your beans, your grains. I forgot exactly what it's called, but those are technically safe stocks, and your gasoline has also risen as well. So the reason why this isn't necessarily a good idea is, or a good thing, is because of the fact that we don't want to see inflation move higher, because that would mean that the FED, want to put more interest rates. In other words, they want, in order to control inflation, you have to control the stock market and add more interest rates to the stock market to mellow down inflation, to allow people to go back to risk on investments in, especially in the tech sector. So right now they're risk off and they're moving into energy, food. Like I said, you have your oils, your beef, energy stocks. Those are more risk off sectors, and that's why you kind of were seeing the stock market kind of collapse, Bitcoin, because of that reason, right? So yeah, so basically, that's basically the outcome of Wednesday's trading session. The consumer price index came out at 8:30 in the morning. This was reported that inflation is still overall increasing at a dramatic rate. Um, they could be seeing, we could be seeing another growth in food and commodity expenses. Maybe by the end of the year, there still is a long journey to go as far as controlling inflation. But like I said, this is a report. This is what they reported Wednesday, and right now I'm going to go over the market's reaction and give my overall outlook of what this means and how can it impact the market. So let me go ahead and take this off here. So what this means when it comes to the stock market, basically, right? You don't want to hear. So this is a Nasdaq 100 again. So during Wednesday's trading session, which was right around here, I believe this was. Let me go ahead. Let me double check that this was a correct date here. Yeah, the 13th, right? The 13th, which is right here. We did have some sort of sell off during the day of here. We had a bit of a sell off in the morning here. If I can go to the Wednesday session. 1 second. Yeah, so here, this was the 12th, which was Tuesday, and again, the market dipped down after hearing around 9:30. I mean, they're not going to show here, but around 8:30ish, the market gapped down Obviously, because they heard that inflation was still a little bit too high. And again, that means that the feds are going to be more restrictive in controlling inflation by adding more interest rates. And that basically moves people out of risk on investments like the tech sector and move on to other risk off sectors like I said, you have your corn, your beans, your soy, those type of stocks, energy, oil, and overall, what the data basically implies is that we're still, the economy is still not looking. It's improving, but very slowly. But until we can get inflation under control, the stock market could see lower, in my opinion. And what that basically means that, like I said, that they're going to be more restrictive, which could lead to more downward pressure. And obviously, from an investor standpoint, you don't want to hear that inflation is getting worse. You want to hear that inflation is getting better, that the dollar value is strong, because obviously, gas is pretty high, and it's kind of like, let's say that the dollar, it's $1, and then it's like a candy bar is worth 50 cents. You don't want to see the food prices be higher than the dollar value, because then that deteriorates the dollar value and it makes it less valuable, and again, that causes stagnation and inflation, and people don't want to see that. Investors don't want to hear that as well. So again, it's not good. You know what I mean? Inflation's getting worse. Food's getting a little higher, costly wise. A lot of people are not able to pay for simple commodities like gas. There's less spending, right? And I'm gonna get into that I'm gonna get into the tech sector in a little bit, but yeah, that's basically what the CPI data revealed. Like I said, inflation is getting it's still going higher. Where it's interest rates are gonna have, or if the Fed's are gonna get more restrictive. And yeah, so that's important because now we have a general direction of where the market wants to go. From a weekly perspective, we still have been inside this range. I mean, we've basically been respecting this resistance on, this is the tech sector, by the way, respecting this resistance, which is 1160. We've just been, trading sideways here, not a whole lot of movement. Again, we're still in a downward trend line. So the CPI data basically revealed that, it's going to be a wild. Once you see inflation calm down, then you can see more upward movement, and maybe the investors and the buyers will come back to risk on investments like Tesla, Apple and stuff like that. So once inflation gets a little better and the next report is better, then maybe we can see more upside. But for now, we're still trading in this inside range here. And also, one thing to note as well, if we go over to let me actually do something real quick here. Let me go ahead and shut this off. I'm going to put the news article again one more time. Let me go ahead and bring that up real quick. I'm going to go ahead and do this as I go. Earning Whispers. For those of you guys who are unaware of this website, I hope get familiar with it. We do have earnings coming up this week. Earnings basically, for those of you guys who are unaware of what earnings is basically a quarterly report that companies like Apple, Tesla, they basically report their financials, their EPS, their earnings, their shares, their likely forecast. They're giving their financial statements about how well they're doing in this current market environment. Have they made any sales? Are they growing? Are they not growing? Stuff like that. And I want to keep you guys informed that earnings is upcoming this week. So obviously, why is this important? Because of the fact that if, like I mentioned, inflation is not under control, right? So the reason why this is important is because now, since we know that inflation is not looking too good, we need to know whether or not how these companies are doing in the midst of all this. Are people buying Apple products? Are people buying, Tesla products? Are people going back out shopping? Are they being more restrictive shopping because they want to save more money? We need to know exactly what's going on in the economy. Are people buying goods and services? Are they not buying goods and services? All that's important. And what the inflation data implies, again, is that there is more. A lot of people are buying, obviously, needs over wants, and that's kind of well, the companies here like Apple and their earnings report, which is should be coming out in 2 weeks from now, right here, July 28th. We need to know what's going on. So that's basically the rundown of this week's trading session. I know it's not over. We still have Friday to go along with, but I just want to make this video super quick. I'm not gonna get into the technicals here, but I just wanted to give my brief explanation of what exactly is going on. So yeah, so inflation is still out of hand. We're waiting for earnings from these companies to see how they're handling inflation, whether they're going to see growth and people spending their money in their companies. All that's going to come into play around July 28th, which is a major tech sectors. And if they report good earnings, right, let's say that they're able to, people are still buying strong. People are actually shopping, they're not saving money. They obviously want people to spend on their company and stuff. If that ends up being good, then maybe we can see some sort of bullish movement throughout the end of the year, because of course we have the holidays and stuff like that. We don't want inflation to continue throughout the holidays and people are not spending their money where it needs to be. So earning whispers for any guys companies that you guys want me to look over for earnings, I can give a brief rundown, but this is a great website and tool to know when they're going to report earnings. This gives away their financials, their EPS, resistance points, all this good stuff here. So yeah, so we're going to see in a matter of a week or two of how these companies are doing. So that's basically the rundown of this week's trading session. Like I said, I just want to go over briefly of what's happened, how the market's reacting towards it. So for now, the market's kind of in mixed. It seems like the CPI data hasn't really affected the stock market too much in a bad way or in a good way. It's kind of priced in at the moment. So just take note that basically, people are still waiting to hear whether or not inflation is going to be controlled. Once these companies report how they're doing, then maybe we can see some sort of like I said, return of buyers into Bitcoin and Apple and stuff like that. But yeah, that's basically my interpretation of this week. Like I said, the data is here. Inflation needs to be under control, and yeah, so we'll see how earnings will go. I'll make a video about that as we approach closer to earnings and my thought process and all that. But yeah, so I hope you guys have a fantastic night, and I'll see you guys next week.